Good evening, everyone. My name is Anne-Marie Band. Today's Tuesday. It's January the 10th, and this is the Moneyball report for the Benzinga Pro platform. Had some technology issues today, so really in the midst of feeling like I wanted to shave my head, I just decided I would step away from the charts for a day, and sometimes that's quite necessary. So let's take a peek at, you know what, I'm going to remove this right now. Remove volume by price. Don't really want to see that right this minute. But what I do want to share with you is the following. Today, we had a very compressed chart. And so what do I mean by that? I mean that in general, we only spent a tiny bit of motion moving around. It was just a very tiny bit of movement, right? Relative to what we've really been doing. And so that kept us a bit sideways in terms of general price action pressure. So what we notice is yesterday, yes, we had this break high into this area that I've been showing us as resistance. We faded down into the support area, and then we began to bounce. So when you're trading this, the first thing you want to think about is, holy cow, how am I going to manage my risk? Listen, with something like this, you got to go in. If it holds, great, take your money and run. If it doesn't, stop yourself out quickly and then remove that overall risk there and then re-enter again when it looks like it's holding on a very tight time frame. What we have a tendency to do is hang on here, and that can make us draw down. And if we're, trying to compete for a professional account with, one of whatever's, then, you're going to get blown out. So you do want to be careful about this, okay? It's just super important that you're careful about your risk and you just let the chart do its thing. And once it's cleared your edge, then you go and get in. But because everything's so messy and very wicky, we really can go from support to resistance, get out, and then try it again. All right? That's really all we can do. Tomorrow, we've got EIA. It's kind of quiet. Thursday will be the CPI. I think tomorrow is going to sit kind of quiet here. Also, a lot of things going on in the chart in general. And so that's something that we really just need to be careful about. Okay, so now let's go back to our regular space and let's take a look at how the 30-minute did. You could see very heavy congestion sitting around old resistance, new support, fight, fight, fight. Every time it comes in, people say, I'm going to hold that position. All right. And so price is really the only leadership that you need to watch. Notice we're above this 39, 34. That's a pretty important area. And it's an important area because it sits right in the midpoint region of the prior month. And so they're going to battle around. Maybe we'll get to 35, 39, 56, 39, 65, maybe a little above. I am not sure. What I can tell you is that I believe that a lot of traders are positioning short for whatever, and I think maybe there are too many traders positioned short, and I think that that could lead to a problem. So I do want you to be careful, be cautious. Remember, we make money when we follow what the broad market action is doing. We don't say, hey, listen, I'm just going to do this because, okay? It's just not. It's not the right thing to do. It simply is not. So what do you want to do? You want to look at the chart. The big bounce into the close gives us a chart that really looks like it could be holding, but again, we pull back into these ranges and then we bounce. Do not buy any breakouts. We've got a double top formation sitting here. Allow the chart to pull in. Allow it to test old support, and then you can do the bounce. Remember how I look at the charts. What I want to do is I pick the candle in motion. I look at two candles to the left, and I let those candles tell me the approximate motion and the target ranges that I'm after. Here we have high-low, a lower high, lower low, but it's a green candle, so it's in conflict. And so when we take a look at a candlestick like that, we can say easily, hey, if I'm looking at this low and I lose it, I know I've got shorting action because it's going to force me into the other candlesticks below, and I'm going to start looking again to say, all right, where's my next area of support? That's just a very important thing to do. Taking a look at SPY broke to that top end of the range today, ended in a doji style candlestick. A Maribozu style candlestick at the top. It closed at the high. That's fairly unusual for candlesticks these days. And so my suspicion is the end of the day stopped the squeeze from continuing. So what we could see is a shallow pullback and another shove to the north. And that area is going to be maybe the 391 area, something like that, where this wick is sitting. If we sit here and we take a look at the big picture from a weekly perspective, we can see that low, higher low, higher low, high, lower high, inside candlestick, breaks out, moves to the range of the next one. Remember, every candle that you're looking, you look 2 candles back. So for this one, as soon as it gets up over here, you go, oh, well, I'm going to test this one. And that's exactly what it did. Went up over the edge and then came right back down, settled in. Here is the candlestick that we are looking at from the weekly perspective. It came in, held the midline of the body, and this region that we've had 386 a long time. We've had this line in the sand. Now it's bouncing, a little bit of a doji style action. Could it chop around here, move to that 394 area, and then come back? Yes. Why? Because our formation is still sideways and we really are not moving under impacting news. We're just awash in, the citadel, moving prices around, or whomever moving prices around while the citadel collects everything, all the money, because people are selling their orders to them, right? So whatever the case is, we're not moving because of impact in the market. We're just sort of sloshing around. And so I really want you to think about that. For the Qs, same sort of thing, a bit weaker than the others, but still lifting, still closing on the high. Watch for either a shallow fade that punches higher, right? Because the shallow fade's going to come. People are going to go, oh, I'm short. I'm going to take the double top. It's going to come back for a shallow fade because momentum is so high. It's going to push it up and it's going to run their stops out. And then the price action is going to turn around. Don't let the market wear you out like that. All right. I'll see you all in the morning.